Hi everyone and welcome back to my channel. Today we're going to talk about taxes on cryptocurrency. With the current coming bull run, I cannot face the fact that at a certain point we're going to need to sell before entering the bear market, and we're going to need to pay taxes to our local authorities. And this is going to be a big nightmare because the financial authorities don't really know how to handle crypto taxes everywhere in the world. We're gonna specifically speak about European countries in this case. So sorry for US people, but if you stick till the end, they're gonna show you a little tool that is gonna help you also in the US to make your crypto taxes go quite smoothly and much faster. So first of all, when we talk about taxes on cryptocurrency, we have to understand that cryptocurrency it's not seen as a stock or a commodity or property everywhere in the world. In every country has a different understanding of crypto, and many countries, as I said, don't really understand how to deal with this. So what I've seen is that in Europe it's very difficult to gather information about what is the real taxation rules that apply, but the general rule of thumb is that cryptocurrency are valued as property. So there is no value added taxes on it, but property taxes and sometimes income taxes. There are even, though, some kind of exceptions and some kind of countries where these taxes are not really heavy or sometimes are even relieved. The second point that I would like to make is that when you buy and sell cryptocurrency, all countries follow the FIFO system. So first in, first out. So as I made here in this table, let's say you buy one Bitcoin the 1st of January 2019, and then you buy another one 2 months later on March. You buy another 0.5 in July, and then the end of the year you want to sell one Bitcoin. So at this point, at the 20th of December, you have 2.5 Bitcoin. Now, which one of these 2.5 Bitcoin you have sold is the first one? Why this is important? It's important because in some countries, the holding period matters for taxation. So if you were going to sell this one, which is the firstest, maybe your holding period is so long that allows you to have less taxation or even zero taxation. While if you just accounted as not in the first in first out system, it could be even the last Bitcoin which you bought only 6 months before, and this can be very negative for your taxation. So this has to be important to keep in mind. Again, here then he sells again 0.5 Bitcoin. These are not the 0.5 I bought here, but these are part of the 0.5 of this one Bitcoin that I bought in March. So we made these two things clear, and now let's dive into the taxation. So I found out that Portugal and Switzerland, for example, have a 0% tax on cryptocurrency. Switzerland actually is a tax haven for crypto, mainly because they recently allowed their citizens to pay their taxes, the real taxes on cryptocurrency with Bitcoin and Ethereum. So at the moment, it's kind of the best country where to live for cryptocurrency. Then we have I made this I renamed this column based on increase on taxation, and we see that for example UK and France have 20%, but UK has an exemption until 12,000 pounds. So it means up till 12,000 pounds of gain you pay zero taxes. Norway 22% like for stocks. Italy has 26% like for stocks, but you have an exemption. So if you're in Italy and you trade cryptocurrency, and in a holding period of 7 days, your total amount of crypto traded is below 51k, you pay 0% in taxes. So let's say that you buy on Monday 30,000 euro of Bitcoin, and on Sunday that value reaches 60,000 and you sell. In those 7 days, you hold more than 60,000 euro that you sold, so it means that you have to pay taxes on the 60k minus 51k. But if you bought 30k and at the end of the week was 50k and you sold, those 20,000 euro of gain are tax-free. So this is very important. Keep in mind of this rule that can allow you actually to really have a nice good return in Italy, because also 51k is not really like a small amount of money to trade. The Netherlands with 30%, Sweden 30%, Ireland 33%. Something to remind in Netherlands is that there is also there is a well tax system. So I would check carefully here, because this 30%, it's not like a rule of thumb that it's applied everywhere. So it's based on a well tax system. So it doesn't look like a normal simple taxation on your gains. Then we go to Germany, Denmark, and Austria. Denmark has by far one of the highest level of taxation. I would say Austria and Germany as well, but Austria and Germany give you a rule in which if you hold your Bitcoin for more than 1 year, you pay 0% in taxes. This is why I talked to you about this first in, first out system. So if you bought your Bitcoin here 1st of January and you sell almost 1 year later, but not completely 1 year later, the same Bitcoin, because it's the first in, first out, you're going to pay 43% taxes on this gain. But if you sell 1 year exactly later, you pay 0%. So this is very important to keep in mind for Germans and Austrian. And keep in mind, this rule not only apply of holding, but also stacking and swapping. So if you buy one Bitcoin the 1st of January and you start to stake cryptocurrency on that, like Cardano, for example, or XRP, or whatever other crypto you like to stake, the holding period is moved every time that you receive the stake, because a stake, it's kind of a dividend. So it's kind of earned income that you receive, and that's also a taxable event. Remember, in those staking money that you receive, you are going to pay 43% if you live in Germany, or any other percentage if you live in another country. And same rule applies to Austria. There is a 600 euro and 440 euro deduction. But you have to keep in mind that the 600 euro, 440 euro deduction applies to the total amount. Means like the capital you employed and the return together, not only the return. Then we get to Spain, which is by far the most interesting in terms of tax, crypto taxation, because here they apply a progressive tax, which I found kinda interesting and fair, I would say. So they say like in the first 6,000 euro of capital gain on your crypto, you pay 19%. And the more your capital gain is higher, the more you pay in percentage. I think this is kind of makes sense. Like sometimes you have like only 1,000 euro of capital gain and you have to pay there 40% taxes, which kind of is insane, considering that it was just a very small amount of money that you made and already half is gone. So I think a progressive taxation with not very high percentages is what every country should do. So shout out to Spain. This was really great. A great system. So as I said, I was going to show you like a tool now that will help you to keep track of your crypto trading, because remember, as we said, a taxable event is not only selling a crypto, but it's also staking and also swapping. So there is if you go to coin trading, there is a crypto tax report that you can use. It's free. You just need to register and then it's free to use, and you can enter various data, for example, your tax year, the method, as we said, first in, first out. It calculates automatically the gains, and it keeps track of all the operation that you did since you started, basically. And this can be very useful because, as for myself, for example, in the last 4 months, I did so many operations that I would never be able to keep in mind without this tool. So yeah, so check it out, see if it's something that you can, if it's something for you, but definitely it's gonna give you a big help on this, on the upcoming year, because next year it's gonna be your worst year for tax report, trust me. With that being said, thank you guys for watching. Please leave a like, subscribe, and see you in the next video.